it'll get up to as high as 0.060. That's the next level to watch. Bitcoin stays these current prices. That's $3,300 per ETH. So Omkar Godbole wrote today that some of the excitement has at least to do with, some of it has to do with the future upgrades in the Ethereum network that's seen as deflationary rather than just disinflationary, which is what Bitcoin is. The bottom line is that Ether is far outperforming Bitcoin. There's a lot more interest in it, and at least some of the Bitcoin has been moved into ETH now.
Yeah, Lawrence, not only that, but DeFi is taking off. We're seeing the price of the DeFi token Maker soaring above $4,000 for the first time. Emily, what's causing this jump?
Well, it looks like MakerDAO is getting into real estate. DeFi is bringing real estate to DeFi. So basically, the idea is using DAI stablecoins to finance a mortgage loan, and this is basically to finance a mortgage. And this is basically such a big deal that even Citibank and Citigroup has been writing about it. So this could be a new engine to power the growth of DeFi.
All right. Very interesting stuff. And the crypto industry in general is experiencing incredible growth as the price of Bitcoin and the crypto markets have been expanding. Our first guest is witnessing that growth firsthand as the head of a publicly listed crypto broker and trading platform. If you bought Voyager stock 1 year ago today, it was worth about 14 cents. Today, it is worth about $20. Joining us now is Voyager co-founder and CEO Steve Ehrlich. Welcome, Steve.
Thank you for having me.
All right, so Voyager is experiencing a significant surge in growth. A lot of brokers are having difficulty meeting that huge demand. In fact, at CoinDesk, we're getting a lot of messages from Voyager users saying they can't withdraw funds. You can imagine how frustrating that can be. Do you know why this is happening?
Oh, look, I think, every one of us in this industry is seeing expansive growth, especially us. We've seen just a tremendous amount of growth that we've put out there. In our publicly stated numbers at the end of March, we haven't seen that stop at all in April. And look, we're very, very careful about the withdrawals because of our own, old banking system, how deposits come in and cash deposits. And look, I think the number one, thing that we work on to make sure every customer and company assets are safe is safety and security of all those assets. So if it takes us a little longer to get withdrawals out, it's because we're doing more and more IP checks and making sure the people on the wallets it's going to are accurate, are right, and abiding by AML KYC rules. So we have to know who those wallets are. We want to make sure they're going to the right people and making sure customer funds are safe.
Yeah, I'm just getting a tweet right now from someone saying, I have a simple ETH transaction that's been pending for about 2 weeks. I also saw that you sent a message to Voyagers, people on your platform, updating them on deposits sent to your payments processor on April 9th, hoping they would clear by April 19th. That's a long time to wait. Why is it so challenging?
Well, look, again, I think there is it was written recently by somewhere else about a lot of the fraud that goes on, with PPP loans and money coming in and all these accounts being set up by some of these micro banks that are there. So we're making sure that customer funds are safe. That's the number one thing. So every account is different. Whatever tweet you're reading, you never know what the specifics are behind it until you actually see maybe that person sent us money and the deposit failed and he hasn't yet paid for that crypto. We don't know until we have to dig in and manually look at all these things and use more technology to make sure everything is appropriate and we're not looking at someone trying to scam, because we see a lot of that on Twitter too. There's a lot of scams on Twitter.
What's really interesting about this situation is that we're in a moment where everybody's always talking about the risks of crypto, but you've actually warned about the risks of banks and of dealing with banks and of banks' ability to evaluate risk. And you sort of sent an unusual email to your customers, kind of warning of some of these risks. Can you just tell us a little bit about how you see the risks that the fiat system and banks play in this economy?
Yeah, it's old and archaic, right? I mean, the way the ACH system is set up is old. There's long processing times. It takes days for it to clear through that system necessarily. And then all the microbanks that really aren't banks that sit on top of the real banking infrastructure accept accounts with less than what I would say great KYC. And so we've got to vet through all that to make sure. So yeah, the old system isn't great, which is why we exist in crypto today. And there'll be speed bumps along the way as we convert from the old banking system to the new system, which is crypto. And look, again, I always say this, and I'm going to continue to say it, is safety and security of customer assets is the number one priority for Voyager. And if it takes, a week or two extra, that's a small, limited number of people that have those delays because we're making sure everybody's assets are safe.
Steve, speaking of speed bumps, Voyager also has several outages over the past year. How are you investing in any upgrades? Are you growing out your the back end, if you will, to keep that at a minimum?
Yeah, look, I think January 28th, we went down. We got, as I like to explain it, we were doing 100 new accounts a minute, which was unheard of in the industry. And I've been in the capital markets and online brokerage industry now for 22 years. It was unheard of. So it was trying to put 1,000 pounds of sausage through a 1 pound casing. We said right then and there that we were going to expand our team, expand our staff. We raised $150 million. We've gone from 25 employees to 100 employees, and that's mainly in service and in technology. And we said it was going to take us at least 120 days to continue to expand so we can, keep that massive growth. We have well over millions of users on the platform now. So we've seen this growth. We're keeping up with it. We're adding more people. We're adding more technology. It's kind of growing pain, a little bit of growing pains, but we're getting there, and we're spending a lot of time and money on it as we see still massive growth in the month of April.
Speaking of growth, go ahead, Lawrence.
You bought a French company, LGO, to get into the European markets, to get some of their approvals and their licensing this past year. How is Europe for your business in general? What % now of your transactions and of your revenue comes from Europe?
Yeah, it's 0% right now because we bought LGO in December. We're working with the AMF, which is the French regulators. We do have a PSAN license, which allows us to bring crypto into the European market. But we're working with them on making sure all the KYC, all the AML procedures we have are better than satisfactory for them. And so we expect to be there, sometime the latter part of 2021. And we have a huge wait list of people in Europe that want to use our platform. So we'll get there by the end of the year. We just want to make sure, back to safety, security, abiding by the rules that are in place, because there's different rules in France and Europe than there are in the U.S., different coins you can offer. We want to make sure we abide by all that.
You mentioned growth. You recently announced a partnership with Lottery.com. Just wanted to get your comments on adding partnerships. So how was that developing on that front?
Yeah, that's a great question. What we're expanding into, because we have this huge infrastructure now of millions of users, is the payment side of the world, where Lottery is going to use our payment rails to allow people to use crypto, Bitcoin, USDC, and other cryptos to participate in lotteries, participate in other games that they have. This is our first foray into that as we're building out the entire payment rails for that. And we have a lot more lined up behind that. And we're excited about that part of the business. But Lottery.com was the first one that approached us about it. And so we said it's a really good opportunity for us to get into that business.
So just to zoom out for a moment, there's a lot of criticism that there's just this market is really, really frothy. And when we sort of look at the individual businesses like yours or a business like Coinbase, a lot of the growth is tied to just how crazy this market is right now. I mean, are you concerned at all about what happens if the market cools? Like, can you continue this kind of growth if for some reason the market crashes?
Yeah, that's really interesting. We see our best days like Saturday night when Bitcoin dropped, give or take 20%. We have Bitcoin believers. We have crypto believers. The market dropped 20% was our best day. We had more deposits coming in on the platform. Again, back to the archaic banking system. Money came in Saturday night. Well, we couldn't get that money. So the company actually goes out on behalf of the customers and buys that crypto while we're waiting for that cash to now clear the archaic banking system. But when we see these dips, we see a decrease. We see more money come in because our customers are believers in the long term. And we all know that in making change doesn't happen overnight. It takes years. And what happens through years of change is volatility. So we know there's going to be more volatility. Volatility is great for our business because any broker wants volatility. That means someone's buying and someone's selling based upon that. We see more buyers on dips. But we just know this is going to be years of volatility as we get to changing the system. You brought up the make or die with the mortgages on all these. We're changing the financial system, and that's going to take years to happen and lots of volatility.
All right, Steve, thanks for joining us this morning, and Great to see that growth.
Oh, thank you very much for having me.
That was Voyager co-founder and CEO Steve Ehrlich. Coming up, a look at headlines in Asia and crypto markets update with Valkyrie Investments. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the daily forecast, April 22nd, 2021. Earth Day, how blockchain hopes it can contribute. Hi, I'm Angie Lau, editor-in-chief of Forecast News. Let's get you up to speed from Asia to the world. So how is this region playing its part? Well, one of the narratives that have dominated is blockchain's perceived carbon footprint. But the latest industry-led effort to combat this perception, Crypto Climate Accord, has in just 2 weeks signed up 12 more companies, including Singapore Power Group and Thailand's state-owned energy firm PTT. Jesse Morris, Chief Commercial Officer at EnergyWeb, the Swiss-based foundation that launched the accord earlier this month, says it's not only good for the earth, it is good for business.
Companies could play a really important role here by providing the renewable energy that can power these blockchains. So they are hungry, right? Renewable energy companies or companies like Singapore Power Group that provide energy solutions, they're hungry for customers. We can make the entire cryptocurrency industry a new customer for these energy companies. So that's kind of why you see some of those companies who've started to support the accord.
Carbon credits in the form of tokens is creating a new carbonomics effect that supports green initiatives, and many Asia-based firms are doing that right now. Publicly listed BC Tech Group on the Hong Kong Stock Exchange announced today it just offset a 3-year carbon footprint by purchasing carbon credits on Air Carbon Exchange. This is a Singapore-based carbon credit exchange, getting credit on electricity generated by a solar renewable power project in India. Another initiative we're tracking in Hong Kong is a project called Sustainable Bitcoin Standard, a marketplace to incentivize miners to use renewable energy to mine for Bitcoin. It's an example of blockchain-based carbon initiatives pushing the technology deeper into the energy space here in Asia and the world.
We're going to create a sustainable Bitcoin certificate that institutions and people who are concerned about the environmental footprint of their crypto holdings can use to neutralize or represent the fact they're holding carbon neutral Bitcoin.
If you look at a lot of the Asian energy companies, for example, is one of the many examples. All of the big guys are doing something in their garage. I mean, they're doing a lot of R&D when it comes to blockchain.
All right, let's see how Bitcoin shaped up today during the Asia trading day. It wrapped up at the $54,000 mark at the close of the trading day, 4 p.m. local Hong Kong time. Asian equity markets saw a mixed day of trading. China stocks were down amid renewed Sino-US tensions. And taking a look at the crypto top 10, Uniswap jumped by around 20%. It is slated for a V3 upgrade in early May. Ethereum was also one of the top gainers today. And finally, speaking of Ethereum, more DeFi developments in China. Conflux, the permissionless Layer 1 public blockchain and the only state-endorsed public blockchain in China, launched Shuttleflow, a multi-chain bridge that connects major chains in Asia like OKX Chain, Huobi EcoChain, Binance Smart Chain to Ethereum. It's a bridge that connects DeFi ecosystems east and west and brings both ever closer together. Fan Long, founder of Conflux, says it's a more secure and efficient way to move assets across public chains.
DeFi projects, they deploy it on Ethereum, they want now to deploy it on BSC or deploy it on Conflux. They just use Shuttleflow, and they don't need to face the issue where, I issued 2 tokens, but there's no place to connect them. Even the same token have different price on two chains. That's a severe problem, and we fixed that problem.
Interesting to see more technology roads built to smooth out DeFi capabilities in China. And that's our daily forecast from our vantage point right here in Asia. I'm forecast editor-in-chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, trade blocks indexes are now the CoinDesk indexes. The CoinDesk Bitcoin price XBX index is right now trading at just above $55,000. Bitcoin still down about 0.8% over the past 24 hours. And the CoinDesk Ether price ETX index is trading at 25.67. Bitcoin hit a price above $25.90 for an all-time high this morning. Ether is up about 8.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Stephen McClurg, Chief Investment Officer and co-founder of Valkyrie. Welcome, Steve.
Hey, thank you so much for having me, Christine.
So give us your take on what is happening with Bitcoin. It's kind of taking a breather or two, but ETH is hitting a record high this morning. What's going on?
Well, there's really two things happening. And one of them we really discovered last week. We see an unwinding of leverage in Bitcoin. And that really played out over the weekend. There has been a lot of people moving into Bitcoin and driving the price up, as well as staking Bitcoin to utilize margin to buy even more Bitcoin. And the way that a lot of people and institutions, when I say institutions, I mean hedge funds that are doing this trade, or even stakers, right? What they're doing has been utilizing GBTC as a way to pay interest on leverage. So going in at NAV on GBTC and then selling it off 6 months later when it hits at its premium. And when that premium collapsed and is now trading at a discount to NAV, it's really caused a lot of unwinding of a lot of that leverage. And we did see a lot of it play out over this weekend. We're going to continue to see that play out. But the second thing that we see happening is people are kind of getting bored with Bitcoin. It's bouncing around between 50 and 60. It goes over 60 sometimes. It goes under 50 a little bit sometimes. And they're looking for the next hot thing. They made their money in Bitcoin. If you've been in Bitcoin even in the last 6 months, you've had quite a bit of returns, and you're looking for the next cheapest coin. And where a lot of people are comfortable with is Ethereum, because it's the next largest in market cap. It's perceived to be cheaper because of its price, but also because of its market cap. So we're seeing that trade out of Bitcoin and into Ethereum, as well as all the news around Ethereum 2.0 coming out.
After Ethereum, what do you think would be the next big hot coin? Because you're right? It's sort of like it was Bitcoin and then Ethereum. What do you see as some of the next coins that are about to blow up?
Yeah, so where I think the next big movement is going to be after Ethereum is probably Litecoin and Bitcoin Cash. And the primary reason for that is you can access it on Robinhood, and you will be able to access it on Venmo. And we're already seeing those two tokens starting to get a little bit of a lift, anticipating the flipping on the switch of Venmo. I mean, once Venmo flips its switch, people are going to be able to trade very easily. Almost everybody has Venmo on their phones in the US, and they'll be able to transact much more easily. And it really is a game changer. So I see a ramp up going into those two. And then people that are a little bit more studious and looking for, well, what's the next big protocol chain? I really think it's going to be, things like Algorand and Polkadot. Those are, the next two competitors to Ethereum, and that's where that group goes to.
So you're not, other than that, I mean, do you see any investment case for the likes of Litecoin or Bitcoin Cash? I mean, is it just because of the access? Is that the sole reason, or is there something that would like a light bulb go off in the investors' heads and the retail investors' heads says, oh, there's a reason to own these other than just the fact that they can get access to it on their smartphones?
Yeah, that's a good question. I don't see a good reason to own it other than for a trade. It is, access is everything. And when it's the same thing when you have a publicly traded company as opposed to a private company, the publicly traded company has access to, a larger army of investors, and private companies simply don't. So those are the main reason to own it. But, there are some arguments out there on transactions and how, Bitcoin Cash and Litecoin are a little bit easier to transact. But there's not a whole lot of difference beyond that.
So I know another one of your areas of expertise are ETFs. And yesterday we had a guest on the show, Eric Voorhees from Shapeshift, who presented a sort of contrarian view of ETFs. He said that ETFs really aren't that important and Bitcoin has basically outgrown them. Like an ETF isn't even going to really do anything for Bitcoin at this point. I'm just curious what your response is to that.
Yeah, that's great. Eric is a friend, and about a year ago this time we actually had that argument. And in person, which was great. But I would say at that time, I didn't think that, a year ago from today, I didn't think that the SEC was going to be that close on approving an ETF. And it really wasn't until really the last 9 months that we believed that they would be close. Now, here's the case for a Bitcoin ETF. And again, it's access. So, at the moment, if you want to own Bitcoin, the people, anybody can access it. Anybody can open up a Gemini account, a Coinbase account. There are a lot of funds available. Valkyrie even has a inexpensive Bitcoin trust with that accredited investors can access. But really, when you get into the world of ETFs, you have an efficient market that's created that a lot more people will be able to access. And when I say that is, if you're some of the larger institutions, I used to manage money for sovereign wealth funds and insurance companies and pension funds. And none of those three categories of the largest institutional investors will go and just open an account on Coinbase or Gemini, nor are they that comfortable investing into GBTC, which is on OTC markets, or even one of the private funds. An ETF is a much better vehicle for them because, number one, it's liquid. Number two, in order to even be listed as an ETF holding Bitcoin, you have to have qualified custodian. You have fiduciary duty as a RIA, and you have monthly, daily reporting. And once that happens, that is really what's going to open up the floodgates for a much broader market than what we've ever seen before in Bitcoin.
Valkyrie, Canada has approved 4 Bitcoin ETFs, the United States 0. You mentioned that the United States is close. Are you hearing some rumblings? You filed for a Bitcoin ETF. Are you hearing back from regulators about something developing in the United States?
Yeah, there's not a whole lot I can talk about there, but what I will say is when we filed back in January for the Valkyrie Bitcoin Fund, we believed that we were about 1 to 2 years out from getting regulatory approval. And once we filed, and obviously you see the rest of the market and you see what's happening as far as progress made by custodians. Progress made by, Bank of New York, State Street, U.S. Bank, all the largest custodians in the U.S. for traditional money are now jumping in the game as well. So they now provide admin services, custodial services, or work with a third party to do so. That is really a response to where we believe the staff is in getting approval. I think we'll have a Bitcoin ETF by the end of the year.
Beyond a Bitcoin ETF, what about an Ether ETF?
Well, there was just an Ethereum ETF approved in Canada as well. My friend and former colleague Sam Saif at Purpose, he launched the very first Bitcoin ETF in Canada. Was the first to get approved for an ETH ETF in Canada as well, and I certainly wish him luck with that. And in the US, I think that it won't be far behind either.
All right. Steve, thanks so much for joining us this morning. I appreciate your insights.
Yeah, thank you so much for having me, Christine.
That was Steve McClurg of Valkyrie Investments. It's Earth Day, so crypto and the environment is in the spotlight. Coming up, Binance Pool on mining clean Bitcoin. Plus, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
In honor of Earth Day, many folks in the blockchain industry are reflecting on how to make the crypto mining industry more environmentally friendly. Joining us now to discuss is Jesse Phillips, Business Development Manager at Binance Pool. Welcome, Jesse.
Thank you so much for having me.
So a Cambridge University study says Bitcoin consumes more energy than Argentina. There are several questions around the negative environmental impact of Bitcoin. Is Bitcoin burning down the planet?
Yeah, we see a lot of this, what I would call FUD, about kind of Bitcoin burning the environment. And I think a lot of it has to do with a perception of Bitcoin as inefficient. And the process of mining as inefficient. In many ways, a lot of times what they're looking at is an apples to apples comparison against other payment processors. And I think zooming out, we fundamentally need to look at Bitcoin mining a little bit of a different way, because what we're looking at here is that Bitcoin is the monetary transfer vehicle. It's the minting and it's the circulation of new currency all in one. So when we're looking at something like Argentina and the value of Bitcoin to the world, it doesn't even seem like a fair comparison, right? For something that is being praised as a digital gold, as something that is highly valued now, that is not only, in my mind, justifiable, but it's also valuable to the world. And I don't think it's by accident. I think it's by design that it takes that energy.
Binance Pool is the third largest group of crypto miners by hash rate. First off, tell us why crypto miners might join a pool versus run nodes themselves. Is there an environmental advantage to that?
Well, sure. I mean, at the end of the day, this is a zero-sum game. All miners are looking for the rewards in Bitcoin. And in general, pool mining is what we consider pool mining is going to be more efficient in terms of finding that block and then getting paid out. And so at Binance Pool, we're aggregating the world's hash rate. We've got clients in every single continent. And what we're really doing is providing a stable and secure way for them to earn rewards. And if they are running on renewable energy, this means they can give back more to the planet.
Jesse, we hear all these looks at Bitcoin, and it says, well, if you have the fiat system in place, you have to keep an army going, you have to keep a government going, et cetera, et cetera. That's the real cost of the fiat system. But if the whole world were to convert to Bitcoin tomorrow, you'd still have some of the same expenses anyway. You'd still have armies, you'd still have governments, et cetera. So how much more efficient would Bitcoin be? Has anybody ever really quantified it?
Yeah, it's really interesting. It's hard to quantify it's really hard to quantify that versus the fiat standard system. And the reason is because we could take a good look at essentially the machines that are coming out, essentially kind of the breakdown of electricity and what's being used, and make fair assessments based on a public and open ledger, what exactly is kind of going on in the Bitcoin world for in terms of kind of the mining aspect. But with fiat, it's a lot more difficult. There's a lot of hidden costs, right? It's much more hard to quantify, for example, all of the people that are working in banking going towards their places of work every single day, and all the internal combustion engines. So yeah, there's going to be obviously comparisons made, but in a world where we see an increasingly digital standard, I think a lot of the stuff that we're looking at right now in terms of the inefficiencies are going to be gone, right? As I said before, it's the security protocol, so no more Garda trucks running around with cash in them. It's the minting of currency, so we're not, cutting down trees. We're not using cotton in vast quantities to make a dollar. And finally, it is essentially a transference vehicle that is outside of all of these servers at the bank level. So in many ways, if you look at it like that, it is the most efficient mechanism on the planet for that. And I think we start to see that moving forward as well.
Let's just talk about geography for a moment. One of the big controversies now in the mining world is, of course, China. And I'd just be curious to hear your thoughts about if you believe that hash rate is overly centralized in China. And is this how big a problem is this? How big a threat is this for just the Bitcoin network?
Sure. In working in the role that I do at Finance Pool, I think we see a vast array of different clients all over the world, and that gives us some perspective onto the trends and the meta market and what's really going on the ground floor. And so what I would say is that I believe that hash rate is actually decentralizing even more, and that is based on the prominence of Bitcoin on a global level. And so what we're seeing actually is a transition around the world into different mining centers, and many of those are actually transitioning onto renewable energies. But keep in mind also, when we're talking about Earth Day and talking about Bitcoin and its environmental impact, a lot of the mining that's being done in China is actually in the Sichuan province, which is more than often running on hydroelectricity. So we're already starting to see kind of a shift in the global light all over, right? This is becoming more decentralized. But even as of right now, it's still primarily on renewables there. And as the lowest cost power producer in many cases, we're going towards a more decentralized future and a more green future as well.
Hydro is always considered, a stellar renewable energy source, but it does have ecological problems along with it. I'm thinking about the Three Gorges Dam in China and all the earthquakes that come with certain hydroelectric facilities being built. So why is that good for the environment and not something that's potentially very clean, like nuclear even? Who's quantifying this? Isn't it just sort of like, well, China's doing this, so it must be good? Isn't that kind of like the argument that a lot of people have been making about Bitcoin's about Bitcoin mining and renewable energy?
Yeah, so I think that I think it's really hard to quantify one type of energy source as good or bad. Obviously, when we're looking at the future of our planet here and the future of our monetary supply intertwined, we are definitely looking towards green and renewable energy. But I don't think that miners in many ways care if it's going to be nuclear energy, if it's going to be hydro energy. Again, this is kind of a zero-sum game and something where miners are always competing to be the most electrically and economically efficient on the planet. And so they are going and kind of filling in the gaps where the traditional system falls short, where there is basically arbitrage to be made on energy and converting electrons into a digital currency, which would be Bitcoin. And so, yeah, all of these things are being used, right? Nuclear, hydro, wind, solar, all of these things are being used. And it's really just depending on what miners can find, what kind of power deals they can secure, and kind of the proliferation of Bitcoin in the general light as more of these power companies, these power producers, and the grid kind of understands the value here.
Interesting
so yes, I think
discussion.
all of them are being used.
Yeah, it's an interesting discussion, Jesse. I'm glad that companies are trying to suss through these issues and looking through them. Thank you for joining us this morning.
Thank you so much for having me.
Right, that was Jesse Phillips, Business Development Manager at Binance Pool. And time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick.
Hey, good morning. How's it going?
Good morning. So there were some developments in the U.S. House Financial Services Committee yesterday. Tell us what happened, what's going on there.
Yeah, so yesterday there was a committee vote on a couple interesting but adjacent policies, bills. So this is mainly, with regard to public companies. So companies like Coinbase, which, as we all have been talking about, just went public last week. But one bill passed through the committee in a bipartisan voice vote would require companies to voluntarily, disclose. It would require companies to disclose voluntary, information about its board directors, including gender, race, ethnicity, and veteran status. Another bill would require public companies and issuers to disclose environmental, social, and governance metrics. So, this is a bit adjacent, but these are some measures that, if they go to the full House and get through the Senate and are signed into law, would put some new interesting regulations on public companies that are trading in the crypto space as well as elsewhere.
Who's pushing it?
So the corporate diversity one, that's the requirement around board directors, has been sponsored by Representative Gregory Meeks, a Democrat out of New York. The ESG disclosure has been sponsored by Representative Juan Vargas, a Democrat out of California.
Nick, a totally different topic. What's going on in Turkey?
Yeah, so very different. Turkish exchange Dodex appears to have gone offline sometime on April 20th. Its CEO shuttered his Twitter account. The exchange is inaccessible. The CEOs reportedly left the country, and users are concerned that their money might be gone. This exchange was transacting some $580 million, according to our colleague Sundley. That has all, apparently been frozen in place. The exchange has a notice on its website saying it's evaluating a partnership, but it's been unresponsive since. Customer service hasn't responded to customers. It raises some questions.
Yikes, sure. We'll definitely be watching that story as it develops. All right, thank you, Nick, for the update.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Time now to check in with crypto Twitter with our tweet of the day. This one coming from Avanti Bank founder and CEO Caitlin Long, tweeting, and it's official, cowboy hat face. Wyoming will recognize DAOs as a new type of LLC effective July 1st. Thank you, legislators and Governor Gordon, for building on Wyoming's history of inventing the LLC, which all other states followed roughly a decade later. We're doing it again, and there we go. So congratulations, Wyoming. And that's it for First Mover. Coming up tomorrow is special guest BlockFi CEO Zach Prince. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.